Hi, my name is Peter Brooke. I'm the Portfolio Manager of Edge 28. Edge 28 is a fantastic fund within the Old Mutual Investment Group, and it's got a phenomenal track record of over 20 years. Over that time period, it's delivered more than 10% real per annum. And I'm enormously proud of that track record for two reasons. One, it highlights our long-term perspective and that our philosophy works over that time frame. The other thing that I think is important is it highlights the continuity and sustainability that we have here, where there's only been two portfolio managers during that entire time. Edge 28 is particularly relevant at the moment, and the reason for that is it's a higher return fund. It has a CPI plus 6 target, which is slightly higher than the typical balanced fund. And the reason I think that's so important is because we're in a low return world. With the low returns available in global bonds, low interest rates, low growth, you need that additional return. And we believe that we can deliver that additional return from three distinct areas. The first is through active asset allocation, where we have delivered alpha of more than 1.5% against competitors and more than 2% against the passive benchmark over the last 14 years where we have records. The second area is from equity selection, where we're running a concentrated portfolio, high conviction ideas managed by Arthur Karras. And this is crucial, the partnership between Arthur and I, where we've got the top down and the bottom up, integrating into one solution, is really working at the moment. And Arthur's actually delivered 2% alpha per annum over the last 3 years. The third area is a key differentiator for us, and that's in the space of alternatives or between the gap assets, where we are very active. Some of those are non-traditional areas like convertible bonds, etc. But we also have access to the skills within Old Mutual who are experts in the alternative space. The ability to access alternative assets and use the full range of Regulation 28 is crucially important to deliver those long-term real returns. One of the advantages of the fund at the moment is because it's small, it's very nimble and can take advantage of all of these opportunities. And that's something we absolutely will preserve. This fund will close when we hit capacity, and one of the distinct reasons for that is all of my pension is in this fund and I'm highly incentivized to deliver the most returns possible. Now clearly for most other people, they're not as invested as I am and would be looking to blend with other funds. And this is another advantage of the fund, is because we're creating alpha from different areas, from alternatives and from active asset allocation, we blend well with other funds and can form a good part of a solution for your clients.